Hi, my name is Jim Hilborn,
And I'm Tom Dinas.
and we are the Small Business Doctors.
And I've been taking care of business every day. Taking care of business every way. I've been taking care of business. It's all mine. Taking care of business and working overtime.
Welcome for another segment of our show, and we're going to be talking about the family business tonight, and
No, you know you're not supposed to talk about that. in
the
public.
family business. Tom can say this. He's from Chicago, but so small family business, small
Yes,
children,
yes.
small child labor. No,
Well, yeah. Well, if you can't exploit your own children now, who can you exploit?
Well, exactly.
Is my motto.
Exactly.
Who's going to pay for all those Pampers and all the T-ball lessons and all that stuff?
exactly.
You got to get something out of them.
I agree. Actually,
And one of the advantages, if you have a family business, you make it a family business by bringing the kids into your self-employed
they're
business.
working for you, right?
And you can hire your children at the same rate you could hire somebody else to do the same job. So, and it's all legit. And you have certain major tax advantages that come out of this.
Right.
Right. For one, you're going to take, say you're in a 25% federal tax bracket and 9% or 10% state, and so you're going to take some money and you're going to pay your kids. Well, you take it from your high tax bracket and we move it into a zero tax bracket.
Exactly.
And so on just the federal tax issue alone, you can pay them up to the standard deduction amount, which is, it changes every year because of the COLA, the cost of living adjustments. But it's around $5,800 now that you can pay them per child per year. And it doesn't cost, they don't have to pay any taxes. Sometimes you have to pick up a little bit on the state end, but on the federal, you don't. You don't lose any of the dependency things. You don't lose the ability to write off the medical expenses or the education credits or any of those things. And so it's really a win-win. And if they're under the age of 19, no Social Security and no Medicare.
Right. Now,
So
when we
it's
talk
totally tax-free. Yeah.
right, when we talk about paying your kids, that doesn't mean that you have to give them the money. I mean, in most states, now you're going to structure this any way you want, but in most states, the earnings of children actually, property of children belong to the parents. Now, that doesn't mean you get to deprive them. That just means that they're minors. They can't own property. And so they can, if they're working for you. Also, in most states, children are exempted from workers' compensation laws. That is,
Some are not, though.
Some may not.
Yeah.
Some may not.
And this you
State
have
to
to
state.
check. State to state, every state.
And
you need to
in
check on
some
that issue.
states, children are exempted from certain age restrictions on working with certain equipment or
Right.
certain hours.
The wage and hour laws.
The wage and hours generally in most states do not affect the children of the family business the way they do third parties or strangers, as I call them. And so you can. I'm not suggesting you work your children like in a sweatshop. I'm just saying you can hire them under hours. For example, most states have a minimum time that you can work. If you call an employee to work, that employee in the states I'm familiar with have a certain number of hours you're going to have to pay them. If they drive in, you can't just pay them to come in for an hour.
Right. You have to give, usually it's a half day.
A half day, usually. That's not true for your children.
Yeah.
You can have them work an hour. It's up to you. And so they are generally, I'm sure there's a state out there somewhere that doesn't follow this, but generally they're accepted from that. And that's because of our great tradition in this country of working on farms and the boats and not the factories, but the
Right.
farms and the boats and the stores.
So, you know, it becomes a win-win situation. You know, so you're saving a lot of taxes, and then there can be, not always, there can be some real benefits family-wise. You know, you're spending more time with your kids, you're getting to know them more under circumstances that you would in a normal parent-child relationship in a work situation. And, you know, you can actually help build a better relationship most of the time. But there will always be the times when there will be conflict and things will kind of go south.
Sure.
But you have to, you know, at least it's a good chance to help bring the family together a little closer.
Yeah.
So,
Yeah.
and
Exactly.
as a self-employed person like you, both I know that we spend a lot of hours working.
Right.
So,
We do.
and if you can bring some of that time and spend it with your kids doing productive work, you know, it's kind of a good thing for both.
Well, you're going to be there, and
Right.
to the extent that you can have your children with you, then that's usually a good thing too.
Right.
Because you know, I mean, this is not a psychoanalysis type of show, but we're going to dabble in it. Why not? What the heck, right? But okay.
Yeah, we have no licensing restrictions on that.
Exactly.
So let
What
it,
the
let
heck?
it,
You know,
we'll
that's
just
what
wing
we
it.
think. So, yeah. All right. So next but there are obviously some things you need to do when you're
Well,
hiring kids.
one, you have to treat them like you would any other employee.
Right.
You know, you're allowed to pay them the same rate. If you're paying somebody $10 an hour to do the job, and the kid can do that same job, then you can pay that child up to $10 an hour. You can pay him less. No problem. But one of the things you have to do is you have to get all the other paperwork. You have to issue a W-2. You have to check with your state to see if there's unemployment. You know, in our state, if the child's under 18, you don't have to pay unemployment on it, and not federal unemployment. So it's a really good deal tax-wise compared to any other employee.
Sure.
So you can get as good a deduction as it is possible for a business and still keep that money within the business. Most of my clients who do use this use the money to set aside for education purposes or maybe a special vacation that the kid wants to go on.
Exactly.
You know, they can still control where the money goes. So once again, you know, it's kind of a win-win, you know, if the kid is suited for it. Now, a lot of times my clients say, well, how old does my child have to be? And it's like, okay, you have to know your child, okay? And, you know, some kids mature earlier and some don't. But if they can do the job, I mean, if they can do the job when they're 6 years old, I normally don't see that, but I see kids as young as 7 years old working in the business doing certain things. I mean, they can take out the trash, they can
Sure.
sweep the floor. My daughter used to dust off my toy soldier collection. That was her job.
Yeah.
She wants to come back and do that, but she wants $35,000 a year now. So
And why not? Because,
yeah.
Actually, it might be a savings to you, but at least you'd get the soldiers.
yeah, at least they wouldn't be all dusty
Oh, no.
anymore. Because I darn sure ain't doing it. And so, yeah, so you need to do the paperwork. As always, you know, it's like playing Monopoly. You got to go past go to get your $200. You got to have all these things in place because if you don't treat them like another employee and issue the W-2s,
You
you
won't
get audited.
Yeah,
you
won't get the tax
deduction.
breaks. Yeah, yeah.
And so that's just the bottom line. You need to do it. You need to follow up on it. Because, you know, I have one client, he pays 3 minor children, total of about $15,000 a year for what they do. He has a nursery type business.
Sure.
And so they can do a lot of the jobs on there.
Yep.
You know, he probably saves $8,000 a year in taxes.
Oh, yeah.
You know, and for the benefit of the whole family. 'Cause
Sure.
That $8,000 just really, you know, can be used for lots of things.
Sure.
So
And, you know, these are kids that are probably saving a little bit of money toward, like you said, toward their own education or whatever, you know, their own car, things that mom and dad are probably going to end up paying
paying
for.
anyway. Yeah.
Exactly.
So,
So,
great deal.
yeah.
So, and so if at all possible, and now we're going to talk, this is stage 1. This is when
Stage
the kids
one.
are young, up to age 19. And we're going to get to the other stages later because they each have their own set of rules and restrictions and benefits.
I love rules, restrictions, and benefits.
That's what keeps us in business,
That's
Jimmy
right.
boy. We go for it. More complex, more.
Thank
you know,
God
it's
for the state
convoluted.
legislatures. They're hard at work every year.
Okay, and now another member of the family you can hire is your spouse.
Of course.
Now, it used to be the spouse working in your business was like one of the best deals going, because
Right.
it used to be they weren't subject to Social Security or anything else. It was strictly, dollar for dollar you could pay the spouse. But then the IRS said, well, that's really too good of a deal, and what we really need to do is change that. So you have to pay Social Security taxes and Medicare taxes on your spouse if you hire for your employee. Now, the
Yeah.
benefits from doing this, one is for the spouse's benefit is documentation of her participation in the business. This can be pretty dicey, especially when you get into cases of divorce, later. And,
Right.
If
Exactly.
that should happen. She says, well, I've been working in the business all these years. Well, how do you prove that if there's no paper trail? Sometimes you can get it, I would imagine, through, calling in customers and saying, oh, yeah, Sally was in there, 8 hours a day. Oh, she was in there every time I came in, working, whatever. But this way, a lot of businesses aren't like that. If she's working in the back room or doing things, where you don't have a customer flow going in and out of the business, there may be nobody to really document that. And so, as a protection of the spouse's partition in the business, have them on the payroll. And once again, you have to do the paperwork. You can have, you need to do the W-2s and file them on the quarterly reports for the federal and the state that you belong to.
Right.
But there is one major perk that you can pick up from this. Now, there's a few others. I mean, if the spouse is working in the business and you go on a business trip, she can go along and all her expenses are deductible.
All right.
So if you're going to a nice seminar and someplace really nice and you have a nice hotel room, you're going out to eat, and and you're going to these classes, you can deduct the total amount of the expenses for both you and her. Whereas if the spouse is a non-participant in the business, you can only deduct what it would be as if you went by yourself.
Exactly.
So, but there is one major benefit, especially now with the horrible increases in medical expenses and medical, you can set up a medical reimbursement plan for all of your employees and their families.
That's right.
Now, who would that be?
That would be your.
That'd be me.
Yeah.
Right. And so what you get is what would be a very limited deduction. You get to be a full business deduction. So you can get deducted from federal, state, Social Security, Medicare.
And the other thing, Tom, if your spouse is an employee as such and paying into the system, you probably can take advantage of what I think is probably one of the better and cheapest disability programs around, which is called workers' compensation.
This is true.
And so if you or your spouse get hurt on the job, of course, and again, as small business people, wow, that's a pretty large definition. Usually, when you're coming and going, running errands for the business, you probably, under most definitions at least, are going to be at work.
Right.
And so there's a good chance that most of the time you would be covered by. Now, there's times you won't be, but but most of the time you'll be covered.
What is the most dangerous part of your day when you're doing anything is being in the car.
That's right.
And if you're doing a business trip or going to the bank to make a deposit for the business.
And
you're
coming
gonna
and going, usually in most states.
Yeah.
So yeah, and so you're covered, and that's important. Now you might have medical insurance from other sources. Okay, great, but the workers' compensation gives you a stream of income while you're unable to work. So that's a good thing.
Yeah. And relatively inexpensive.
Relatively inexpensive,
because
yeah.
mostly the spouse is going to be in a clerical position. They're not going to be up on the roof pounding nails and or doing demolition work.
And a total deduction.
Yeah. Once again,
Yeah.
fully deductible for the business.
Yeah.
Not a bad deal. If you are not married, don't have the benefit of a marriage, and you
Oh,
have
poor thing. Oh, sorry. Yeah.
cohabitation, and then you definitely, from the spouse's point of view, want to be on the payroll.
Oh yeah, a lot of times we talked, and a lot of times divorce law will come in when you're married, and they'll talk about well there's a presumed contribution of the spouse, or most states get there in some way. Some states require you to prove, some don't require it. Community property states, okay, we don't, they don't care, and other states by virtue of how they interpret their common law marriages think that wages earned or interest in the business is going to be both spouses, but not always, and it's not a bad thing always to be able to prove where you're at. However, when you cohabit, and we've done a show on this, different game,
Yes, completely.
totally different game. Yeah. So if you are the boyfriend or girlfriend, or even, you know, I guess we call each other that, but then, and you're working for, you know, your
Yep.
boyfriend or girlfriend, and you're really not getting paid, and you're, you know, you're counting on this as something you think of is going to be for the benefit of both of you,
Retirement for both of you.
everything,
Yeah.
you know, and then it doesn't, and then something happens, and you're no longer together.
You're SOL.
Yeah,
Significantly out of luck.
that's right. That's right. And
So
Yeah.
that's something definitely to keep in mind in the whole process.
yeah, exactly. And so we've done a show on that. We talk about the different the problems you might have. We've in a nutshell we talk about you know, agreements, written agreements, employment agreements, partnership agreements, LLC membership. You know, those kinds of things. You need to be aware of that. Yeah.
Right. Now we enter into stage 2.
Stage 2.
Stage 2. This is when the kids.
Houston, we have a problem.
Yes, we do, because they're teenagers now.
Oh God, Houston, we have a major problem.
But when the kids turn 19, they lose.
And you
some of
haven't
the
killed him.
Yeah,
Yeah,
yeah. You still, you know, somebody says.
We'll talk about defense based upon insanity.
Yeah,
in
the
another
biblical
program.
story
Yeah,
where
yeah.
he was going to kill his child for God, you know. and
Abraham.
Abraham. The kid was like 13 years old.
That-
It's like that explains everything.
Yeah, yeah,
It's
perfect.
okay,
Yeah,
I'll
yeah,
do
I got
that.
it. I got it. Yeah. Yeah.
But anyway, after they turn 19, you have to treat them pretty much like any other employee.
Right.
You
And
have
right.
you have
Sure.
to you have to pay the unemployment on them. You have to get the Social Security and Medicare taxes paid on them.
Mm-hmm.
You still are taking it from your tax bracket and moving it into a low tax bracket.
Yeah.
So you're still saving the differential between 0 and maybe, even if you pay them more, a much lower tax bracket, maybe 5-10%, compared to your 25 to 35%. So
That's
there's
right.
still a significant savings, except you have, you know, it's not as good a deal as it used to be. And I normally take stage 2 to age about 26. It's the college age. You know.
Yeah, you're in and out. by
Yeah,
then,
they're
you
going
think.
to school. You can still claim them as a dependent. They're full-time students for part of the year. There's, you know, clients that say, well, can I pay for my college through, you know, for it? And that can be done, but it has to be a much larger company. You can't do it as a sole proprietor or a partnership or a closely held corporation
And you're talking about actually a payment for education of
for
an
education.
employee.
There is an education program, fringe benefit, but it's limited if you are more than a 50% owner in the company.
Okay.
So if you are
Can't take it if you're an owner.
right, it
Okay.
doesn't. Yeah, and I think it's maybe even more restricted. Might even be down to 10%. So it's pretty hard to get in, and it has to be a group policy, a group plan.
Covers
so
everybody.
Everybody's
Yeah.
entitled to it, and so that can be quite spendy if somebody says, Bobby's going, so I want to go too. And so
Sure.
if he qualifies, you either have to stop the plan or cover him too.
Yeah.
So
And of course, you're as the parent, you have some control over how much of this savings of your earnings are going to be required by your employee child, and you can make them pay a significant portion. You know, you can put the money toward. I mean, whatever you think's right, but put the money toward school.
right.
Yeah.
So, so you know, that's basically the only difference in stage 2. The spouse and the cohabitation people. It's,
Plantation people.
you know, what are we going to call them? You know, somebody. Yeah, I'm getting real tired of
Partners, I don't know, you know,
middle
I
age.
feel-
Hi, this is my girlfriend.
You know, I do it though. You know, I've done it. You know, I do it. You know, so I don't know. You know.
But anyway, the only thing, and we've moved, you know, 10 years down the road, and everybody's gotten a little bit more testy, and tempers flare up a little quicker.
Sure.
And, you know, after years and years of the same problems over and over again, sometimes, you know, family discord breaks out. So
Yeah.
in stage 2.
Well, probably some kids want to maybe join the family business. Many of them don't. Don't want anything to do with it. So
Now,
yeah.
there is also another special problem if you are not married and the person you know, your significant other, or whatever you want to call it, that person, works in the business and they have kids.
Okay. Yeah. Another good question.
Those are unrelated taxpayers and must be treated at any age as another employee, subject to all taxes, Social Security, federal and state tax, and workers' compensation.
Now, this is
because
an unmarried couple.
unmarried couple.
What
and,
if,
the
uh,
other person's,
Yeah.
your children, your biological children are okay, but hers or the others is not. It's like any other non-related person. It's like any stranger coming in and just getting a job.
Okay.
So-
What if, and I know you haven't looked at this maybe, so if
this
you
is
haven't looked at it, I'm just,
Tough.
this is the stump the wizard. Okay.
Stump the dump.
Yeah. What happens if you both own half the business?
Well, then you have a partnership.
That's right. And
And partnerships have more restrictions than the sole
Okay,
proprietor
okay.
as far as children being
okay.
hired.
All right. Okay.
And so those perks are almost exclusively for the sole proprietor,
All right. So
I
the-
believe.
And so, would that be true for, say, an LLC or a corporation that had a single shareholder, or they would still be a sole proprietorship? Well, an LLC is would be considered.
Yeah, it's a disregarded
No.
entity. You know,
Yeah.
LLCs, and we've talked about this in several, LLCs don't exist under the Internal
Right.
Revenue Code. So it's just,
Okay,
you're a
sorry
sole
to break in
proprietor. That's okay. You know, this is
You
some
know-
of the questions that are people out there going, why doesn't this idiot address this problem? This
I'm
is
sure
my
they don't.
issue.
I'm sure they don't. Tom. I'm sure they.
In that case, we're just going to go to stage 3 then, if you're going to be all snippy about it.
Yeah. Okay. Let's go to stage 3. Stage 3 coming
Stage
up.
3,
Boom.
the,
All right.
the kids are now adults
All right.
plus.
Good.
35 going on. These are children that are serious about becoming involved in the business on a full-time continuing basis.
Okay.
This is where, you know, we talk about the real family business as such, where everybody is a full participant within the business. You're maybe grooming one or more of the children to take
have the
over
crown
business.
prince
We
or
have the crown,
princess.
the heir apparent, I call them.
Okay, yeah.
The heir apparent, and so then this starts tying in now all the other old tax perks that we got is basically all chump change and has nothing to do. This child is a full and regular employee. There's nothing
Making
about
a
it.
living. This is what they do for a living.
This is
yeah.
what they do for a living. They have their own tax issues. They have their own, you know, relationship entanglements or whatever. So, but it's just like any other employee. You know, you leave it all at the door, come in, you treat them like any other employee, with the exception that you probably am grooming them to do one of the usual things when you bring an adult child into the business, and that is somebody to turn the business over to,
Sure.
retire off of their taking over it or buying it out from you.
Yeah.
So-
Fast track management.
Fast
Yeah.
track management.
Yeah.
And you know, and if they worked in the business when they're young, they know the business, they have a skill set that probably exceeds most employees coming into that business. They've known it for years. So they make very good source of taking over the business. You know, and it's somebody you can trust, you know, and
You should know. You
you-
should
you-
know by
then,
now.
By then, yeah, if you don't, you've got some problems
Yeah.
that need to be addressed, and we need to do that psych evaluation for them. So,
This is Dr. Drew. No, wait.
I'd love to do that program.
Wouldn't it? Wouldn't you? Yeah.
But yeah, but then this comes into succession planning,
Exactly.
retirement, and estate planning, because there's lots of things. You know, if you've had a business that long, it's probably a pretty valuable asset.
We
probably
hope.
the-
Yeah, we hope so.
And so there's lots of, in addition to legal considerations, you know, in doing this, because we're going to transfer stock or ownership. We probably are not operating it as a sole proprietor anymore. We've probably converted into a corporation.
Yes.
And start transferring stock over.
If we haven't, it may be time.
Yes.
Yeah,
Yeah,
but
it might be
just
a
for the
perfect time.
ability to break that corporation down into
Exactly.
less than 1% shares and start transferring percentage points out, either by sale or gift, even sometimes. Yeah.
Right. Or they can work into it. You know,
Yes.
and there's some things you have to be careful if somebody's doing work and then you're going to give them stock or ownership. You may wind up with a problem of that's some type of compensation.
Right, exactly,
So you
yeah.
have to, one thing you have to get, you need somebody, an attorney, an accountant, get in
Right.
there and help structure this deal, because it can be very complex. And there, once again, there's lots of little landmines that you can step on and screw up the whole thing.
Yeah, this is definitely a
cost you-
professional kind of
Right.
planning, but you need to know that you can do this and fund your retirement as you're going out the door, so to speak, and you can If you are at that point, you can significantly reduce your estate over several years.
Save huge amount
So-
of estate tax.
Yeah,
in
now
this
we
too.
don't know what estate tax is as of right now. It's like $2 million. If the taxable estate is something over $2 million, who knows what's going to be next year? I don't know. We all apparently hate the rich here.
Of course.
So
That's always somebody that has more money than you. So,
that's
yeah.
I knew that. All
Yeah,
right. Yeah.
okay.
Yeah. Exactly.
And we've done, once again, like a lot of these subjects, we have a whole show that we do on succession planning
Right,
for a
we do.
business. We can't.
And I do most of the talking, so you know it's
Yeah,
worth
and
watching.
I just
so,
sit there
yeah,
and nod.
Yeah. You just,
Mhm, yeah, Jim, you're really cool.
Yeah. Exactly. I like that. I like that a lot. But
But also at this time, when you start selling the business to the children, for some reason, and I don't know why this is, the spouse that's been working in the business all these years starts causing discord. Because any relationship or financial issues that have kind of smoldered for years and years surfaces during this part of the process. And I don't know.
now that you mention it, I have to admit, I guess that's true. That seems to me that's, you know,
Well, it's hard to get two people to agree 100% on everything. These are very complex financial transactions affecting the rest of your life. You know?
and sometimes when you have you know, you have father and mother, and then you have children, and now you have one child that wants to have the business and has been working there and earning that right to buy that business for a long time usually, and sometimes there is a problem with the other children. There's a problem with the other spouse who doesn't necessarily agree that it's time, or that milestone has been reached, or that
Or that they're entitled to
what's the
this.
other three or two children going to think? And-
Yeah, and one's my favorite. you
yeah,
know,
and little Bobby's just getting out of rehab, and doesn't he get a chance?
Yeah, and also during this period of time, a lot of times ex-spouses pop up again.
Oh,
The smell of money.
well, yeah, sure. That's always the case. Yeah,
Yeah. So
But-
these are things you have to start planning for early on in
Right.
the process, and that's why I say.
good wills and yeah.
Oh yeah, good
And-
good
yeah,
tight
you have-
wills and and a good estate planning.
Right.
And the whole ball.
You've
wax.
already had the divorce, so but now we're seeing somebody champion. Maybe you got children from different marriages. Oh,
Yeah, and that
And
part
that's-
can be.
yeah,
Why
exactly.
are my children being excluded from this process, and
Or-
only your children are?
yeah, or maybe your present spouse is saying, who has maybe younger children with you, or children. I mean, you obviously see that this thing can be
Oh.
it's worse than Chinese checkers. I mean, there's a lot of different jumps to be made. Yeah.
So it has to go through a lot of You might even wind up having to go through counseling with one of these things. I mean, because it all has to be on the table, because everything is going
Yes.
to come out in this. Who's going to get what is going to have to be part of the estate plan. And so a lot of things are going to become obvious about who's going to be getting what. And it's like and it can cause a lot of family problems.
That's right. There's been probably some assumptions that have been made
Oh,
over
yeah.
during the years that you've made that your spouse, your significant other there has made, and maybe now it comes down to putting those things down in black and white, and suddenly that's not what I understood. Yeah.
Yeah. And so, and of course, we don't have enough time to go into a full analytic, analysis of the human psyche. So we'll
No,
have to put that off for another time.
And I had just
you were just getting warmed up, weren't you,
I
Jim?
was going to explain
ready
the
to jump
university
on it.
there.
Yeah.
So okay, I terrific topic, Tom. And,
Yeah.
I just this is so. We do some other stuff, and this is good stuff, though. I mean, you can really get to do some wonderful things tax-wise when you start planning a succession of your business.
Right. And so, anyway, it was a good show.
I think
Glad
so.
we got into this one.
Yeah, so,
and we're
right.
going to be doing more.
Till the next time, then.
Yeah.
Bye-bye.